Hello, everyone. I would like to welcome you to our event today. We will be discussing the upcoming July 1st changes in Europe and the collection of tax on low-value products. I am Jane Collison on the Zonos Global Trade Team.
Hello, everybody. I'm James Marley, and I'm with Zonos's Global Partnerships team. Now, with regard to questions, please submit any questions you have either into the Q&A feature at the bottom of the screen, or just go ahead and send them to questions@zonos.com. Once again, that is questions@zonos.com. We expected this presentation to be completed in about 20 minutes, but this should allow a few minutes at the end of the discussion for us to go through a few of the questions. So in summary, it should be about 30 minutes in total, 20 minutes talking and 10 minutes at the end for questions. We are also recording this so that we can send it out afterwards for anyone who missed it. So with regard to kind of what we're going over today, we wanted to put a bit of a statement of purpose in. The first thing to understand is this is not a sales event. We're not here to give you a really hard sell on Zonos products. The intention of what we're doing today is to show you that EU VAT is not as complicated as it seems, and to ensure you understand all of your options for handling EU VAT after the 1st of July. Jane, did you want to say what we'll be focusing on?
Absolutely. So the focus of this presentation is on businesses outside of the European Union selling to the EU. An example would be a US online retailer selling to a consumer in Germany, or a UK merchant selling to a consumer in France. So what do you really need to know about the new EU VAT scheme? Earlier in 2020, everyone was concerned about Brexit. Now Brexit is thought as yesterday's news. The EU VAT scheme is just our current event that we are adjusting to. We're going to get through this. It is likely that in a few short months, EU VAT will seem like old news as well.
Now, with regards to the structure of today's presentation, we wanted to make sure that we only provide you the information that you need. So we've really tried to simplify the agenda. First, we're going to discuss why the rules have changed, because I think this provides context for the new rules. Secondly, we'll talk about what the new scheme is. And third, we're going to go through how this directly affects you and what your options are. We'll discuss the 3 options all businesses now have for shipping to consumers in the European Union. And then last of all, the big reveal. Now, please bear in mind, this is a VAT webinar, so it's not going to be that exciting, but we do have a very big reveal right at the very end to really kind of keep you focused and involved. So throughout the course of this webinar, if either of us uses jargon or acronyms, we have committed to put $1 in a jar. So if you notice us using too many, please mention it in the chat. Jane, did you want to discuss next slide?
Yes, thank you. So please notice we put a big stop sign on this slide. That's because there are a couple of fundamental things to remember about the changes for July 1st. And this is really the important part to remember. IOS and the new VAT rules only apply to goods under 150 euros. No need to be concerned about sales over 150 euros or business-to-business sales. Only low-value business-to-consumer shipments. We are presenting your options or solutions for however you decide to handle the new EU VAT rules. James?
I've seen a bunch of these webinars, and there appear to be kind of a set of recurring questions that I thought it might be helpful to address up front. So as we said, the new EU VAT rules only apply to business to consumer shipments. That means if I have a business in the United States and I sell to a private individual in, for example, France or Germany within the EU, that is a B2C transaction. Wholesale orders, so selling to a retailer, for example, in Europe, or other B2B sales, they're not going to be affected at all. So, for example, samples do not come under the new VAT scheme either. There's actually an existing and separate process that's got to be followed for samples, and returns also are not affected by the new VAT scheme. And then the last point, which I'm sure we'll keep repeating and say a lot throughout this presentation, is that the new IOS, or Import One-Stop Shop service, is an optional service. You don't have to use this. So why has the EU brought in these new set of rules? I think it's important to understand why, because it helps you understand how and why the new rules work the way they do.
Some businesses have gotten away with this situation for a long time by undervaluing undervaluing their shipments below the 22 euro de minimis to avoid a VAT charge. This resulted in unscrupulous businesses committing a significant amount of VAT fraud. The new VAT rules and regulations were designed in part to stop an estimated 7 billion euro or 8.5 billion USD in annual VAT fraud by non-EU merchants.
Yeah, this next one, level the playing field. This is a phrase I've heard over and over again as justification for these new rules. And I'll be very honest, I don't really get it. Now, it's understandable that domestic businesses in the European Union were upset that foreign competitors didn't have to pay VAT on low value goods. Then again, those foreign competitors did have international shipping costs, which tend to be a little bit higher than domestic shipping costs. Even so, I accept it wasn't necessarily a level playing field. The difference now is that if foreign sellers want to use this new iOS service, and I'll go into what that means more later, then they have to pay for what is called an intermediary service. Domestic businesses don't have to pay for that intermediary service. They also don't have to pay for international shipping. Therefore, it's fair to say that the field is now tilted more in favor of those domestic sellers than it is of the international sellers, which is probably as it should be. However, I just don't think it's necessarily an honest justification for these new rules coming in.
Then there is the concern of outdated rules. Large companies with high shipping volume need to register in 27 countries to keep track of all of the individual reporting concerns. The new regulations have designed to allow the EU businesses to benefit from a simpler process.
And lastly, Brexit, the dreaded B word. I don't want to go into this too much at all right now because it may confuse matters, but the UK introduced a new VAT package on the 1st of January, which obviously would have had implications for EU merchants. The EU actually wanted to launch this VAT scheme at the same time. However, they weren't ready on time. And Germany and the Netherlands actually have been petitioning to have it delayed until January 2022, but were actually denied. Nevertheless, Brexit has been a big factor in the EU launching this new VAT scheme. And then that last point with regard to tax revenue. Now, I'm sure you're all aware, if you're on this call, that online retail has done very well out of the lockdowns around the world where people were inside and doing all their shopping online. And so it's obviously a pretty blatant target for governments to recoup some of their costs for all the furlough schemes and vaccination programs. So, these are the main changes for why the new EU VAT package is coming in. Now let's take a look at the actual scheme itself. I really like this slide because I feel like we're handling this in a really honest way. So the first one I've put on here, which is quite unusual for a webinar, is I've put this special arrangement for carriers to collect VAT. And I've put that first as the first kind of point of what the scheme is. Now, why have I done that? Well, the UK VAT scheme, which we just mentioned, was mandatory from the 1st of January for all goods under 135. You had to register with HMRC if you're shipping goods under £135 into the UK. The EU system is not mandatory. It's not compulsory at all. iOS is in fact optional. The special arrangement means that you can continue to ship with express carriers just like you did before. And they'll collect the VAT when the goods arrive in country based on the terms that you select on the shipping label or the carrier invoice. And those are referred to as Incoterms. You can choose with those Incoterms to either have the VAT billed back to your shipping account or let the consumer pay them on delivery. And we'll go into those a little bit more later on.
Okay, so VAT is now due on shipments that are 22 euro and less. The new rules apply to every shipment, and every shipment is going to undergo individual clearance due to the change in the de minimis. This is a big reason why the carriers want the majority of the shipments arriving into the EU to have the VAT prepaid at the time of sale. If the VAT is prepaid, customs will have fewer areas to review on the clearance declaration. This should speed up the clearance process in dealing with the increase of low value packages going through individual review. Prepaying the VAT is a great solution for transparency of landed cost and will improve customer satisfaction as well. We will explain more about this further in the webinar.
And then the introduction of the optional iOS service. Now, this is a little bit of a big one. So what I'm going to do is I'm going to explain kind of what the rules are right now, and then I'll explain what the new system that is coming into play. So currently, what's in place right now before the 1st of July, there are what's called distance selling thresholds within the European Union. Now, if the total value of goods sold into, for example, Germany, is over 100,000 euros per year. So I have an e-commerce business and I'm based in, UK, USA, Africa, wherever. Then and I sell into Germany, and the total value of those goods sold into Germany is over 100,000 euros per year. Then what I have to do is I have to register for a German VAT number. I have to charge the German VAT amount in the checkout, and then I need to remit that VAT to the German authorities once a quarter. And the VAT amount I need to charge in the checkout is 19%. Now, each European country has its own VAT rate. So France is 20%, Spain's 21%, Germany's 19%, Ireland's 23%. Currently, each country also has a distance selling threshold. So France is £35,000 per year, 35,000 euros per year, Spain's 35,000 euros, Germany's 100,000 euros, Netherlands is 100,000 euros. Now, you can imagine that if I'm a really big organization and I have to register in all 27 countries, it's going to cause me a load of hassle and cost. So I'm going to have to work out, ensure that I'm charging the right VAT amount. And then I've got 27 separate VAT returns to do per quarter. The EU, and this is this is the situation as it is right now. Now, what's going to happen is the EU is going to entirely scrap the distance selling thresholds because they're as complicated as I just kind of probably made them sound. Now, the VAT rates actually remain the same, but the thresholds are now gone. So the new iOS system, it's kind of cool because it's going to allow me to register in one European country and report all of my pan-European sales in a single return to that one country. So, for example, I could register for an iOS number in Ireland, and then I'd be reporting all my sales that go to Germany, France, all those different countries to Ireland. And my remittances would go to Ireland as well. And then what would happen is Ireland would distribute the money collected for France, Germany to those countries. Now, this really does simplify things, but it does require non-EU businesses to appoint what's called an intermediary. Now, this is an in-country representative who's going to pay your VAT and take on liability if you default. And there's obviously going to be a cost for that. And VAT companies are all over the place in terms of what those charges are going to be. Another good point to understand is that once you've registered for this iOS and decided that you're going to use it, then you have to stick with it. You can't do some shipments with the DDP option, and we'll just explain more about that later, and some iOS. You have to do all your low value goods into Europe using that iOS number. But one of the good points of iOS is that if you put your iOS VAT registration number on your paperwork, then the carriers aren't going to charge you disbursement, advancement, or DDP fees on your shipments into the European Union. So that is potentially a way of saving costs, which may be very attractive to businesses, particularly in the UK after Brexit, who have the costs of, Brexit fees plus DDP fees on all those goods going into Europe, which might be, £9 or £15 per shipment increase since the beginning of January. So ultimately, deciding whether or not to use iOS is basically, it's a simple calculation of the costs of intermediary and the administration of running that iOS scheme versus the carrier fees for those low value items. So, I've probably made it sound more simple than it is, but get in touch, please, with us, and we'll help you decide which is the best solution for your business.
Thank you, James. So our last bullet point on this slide is regarding marketplaces. So what is a marketplace? We know the names. A marketplace connects buyers and sellers. This has been a very successful model because 62% of online sales are through these marketplace platforms. The EU will now consider marketplaces as the taxpayer. Hear that again. If you're working with a marketplace, they need to set up the iOS program. They will be in charge of the VAT remittance rather than you as the online retailer. So they will have to be responsible for collecting, reporting, and remitting the VAT due from the end consumer. So please follow up with your marketplace platform regarding how they are going to handle the EU changes. Now, what are your options? Option 1. Our first option to discuss is when the consumer pays the VAT at delivery, also referred to as DDU, deliver duty unpaid. This is when the VAT is not included in the sale at checkout. This is a common way to do international trade, or it has been. You may be sending shipments today when the consumer pays the VAT upon delivery. So just a review of the process. The online merchant makes the sale. The cost of the goods and the shipping is itemized on the commercial invoice, and the shipment is processed for the carrier, indicating the desire for the carrier to collect the duties and taxes. Then the carrier collects the fees from the consumer. Now, after July 1st, when the carrier has to collect the VAT, the carrier will be using the special arrangement of being able to collect the VAT and remit the money to the country on a monthly basis. Carriers starting in July are liable for the VAT if the shipment is delivered. They are motivated to collect the VAT from the consumer. It is understandable why some small carriers will no longer accept DDU shipments. The large carriers will charge the consumer a disbursement fee or a prepayment fee on all DDU shipments. This is a brand new fee. This will be a fee the consumer and another surprise at the time of delivery. Zonos believes that this option should be avoided due to the poor customer experience. James?
Yeah, I really want to emphasize this is not a good user experience at all. If you imagine your conversion rate is made up of about 50% new acquisition customers. So that's traffic you bought from Google or social media and traffic you've bought to come onto your site. And then the other 50% should be made up of repeat business. You could end up halving your conversion rate because these customers aren't going to return to your site to buy from you. And also this option, this DDU option, is probably going to cause carrier delays because they're going to need to get in touch with the consumer by phone or email or even knocking on the door to ask them to pay the money. And there's obviously some potential talk of some carriers even refusing to do this afterwards because of the admin burden that's on them. So let's now take a quick look at the iOS scheme, and this is your second option. So let's assume you've registered for iOS, you've got your iOS number, and you've got your VAT intermediary set up, and you're ready to go. So how's it going to look? The customer's going to go onto your website and buy the product. In the checkout, you're going to charge the local VAT rate for that country. Now, and as we said, each country has their own VAT rates, and we can help you work out this with various products at Zonos. You can then dispatch that shipment, and on the commercial invoice, you're going to put your iOS number, which you then digitally transmit to your carrier. Now, when the goods get to the border, the carrier will see they don't need to do anything with the VAT. So they'll just deliver the shipment as if it were a domestic shipment. And then later that month, you're then going to send the money or the revenue that you collected in the checkout to your iOS selected country or your iOS selected intermediary as part of your iOS remittance.
Okay, so James explained how iOS works. Now, why should an online retailer participate in the optional iOS program? Well, 2 reasons. iOS has the potential for the fastest transit time and the best customer experience for your customer. And iOS helps to ensure a more efficient customs process because the VAT is already prepaid. It will be vital to list your iOS VAT ID on every shipment, or the clearance process will not know what has been transpired. You must provide your iOS number every time you ship, and you'll enter it in the sender tax ID field. The carrier can move an iOS shipment directly out for delivery once it has been cleared. But this also means that there is price transparency to your consumer. The consumer will know the entire landed cost with no surprise. This is a good customer experience and results in possibly great reviews and fewer returns and possible repeat orders. iOS is only for B2C shipments with a value under 150 euros. So that currently converts to 184 USD. Consider how many of your shipments are under this value. Many carriers have gone on record that they favor or support the iOS program. Since the VAT will be prepaid, the online retailer will avoid paying the carrier's advancement or third-party collection fee.
And just to reiterate on this one, once you use the iOS, you have to use it for all your low-value shipments into the European Union. As I said before, you can't chop and change between sending them DDP or sending them iOS. It's got to be one or the other.
Okay, now option 3. What if you do not want to sign up for iOS, but you wish to quote and have the VAT paid at checkout? The online merchant will quote and collect the VAT from the consumer on the shopping cart at checkout. You may already be doing this. Then the shipment will send the shipment as bill sender or bill third party for duties and taxes. The carrier refers to these, of course, as DTP or DDP. Be aware that a surcharge from the carrier will apply to these shipments. Providing a full landed cost to your consumer improves satisfaction and increases the likelihood of a repeat customer. This is a good option for a customer due to transparency, full landed cost at the time of checkout.
Yeah, this is a really great solution because it's tried and tested. You know, it's available right now. And businesses might even consider opting for this initially while they monitor the success of the iOS program before they decide whether to jump in or not.
Okay, so let's review the options. Does this affect you? Well, yes, it affects everyone. All shipments will be subject to VAT. Now, however, you're not obliged to change your habits, but you do need to be aware of the EU VAT regulations and determine what is the experience you want for your customers to have on these low value items under 150 euros. So we have the import one-stop shop where VAT is collected at checkout. This will require from you, the online retailer, a monthly remittance to one country in the EU for all of your sales to the EU. Or you can collect VAT at checkout, utilizing the carrier's duties and tax billing options as sender to the third-party account number. And of course, the last option is you don't collect the VAT at checkout and have the consumer pay upon delivery. Now, a reminder, please check with your express or mail carriers to determine the availability of these options within their policies.
Okay, so this is a quick kind of slide to show you, what this could potentially look like in the checkout. And what you'll see is you've got the product value here and over here, and this is actually a Zonos technology. We're calculating the exact taxes for this shipment when it gets into the country. And what we've done here is we've actually used a UK shipment because this is a VAT scheme that's currently in play right now to demonstrate to you how this could look. So let's wrap up because I'm very conscious of the time. And this is the big reveal. This is exciting. This is the thing you've all been waiting for. So Zonos is going to be offering 2 solutions to streamline the iOS, the import one-stop solution. We can help you get set up with your own iOS number. So we can support you, do whatever you need to do to get you with your own iOS number, either through ourselves or through one of our partners or however you guys want to do it. Or by using the Zonos landed cost guarantee, which is one of our products. And this is a product that is going to remove all uncertainty from international costs. You're actually able to use our iOS number, which is kind of a cool and exciting product to be able to reveal today. So please get in touch with us to discuss this further, because we think this is going to be quite kind of innovative and dynamic in the marketplace, and it's going to allow a lot more people to make use of that iOS service. And if you don't want to use iOS service, then that's not a problem. We can help you calculate all your shipping costs so that you never lose money on international orders. Yeah, and just last thing I want to say before we get to the questions is, Zonos is really here to support you, however big or small your business is. we are a pure play technology company. We aren't a middleman. We're not a reseller of shipping services. Why aren't we? Well, cross-border e-commerce really doesn't have a shipping or a tax problem. It has a technology problem. And this is the niche that we really fill and we focus on. And we focus on providing the most cutting edge technology and decoding cross-border e-commerce. So feel free to get in touch and we'll do everything we can to support your international growth. That's everything I wanted to go over today. I think everything we wanted to go over. Please get in touch with the team if you want to discuss circumstances that are specific to your business. Remember, there's also that questions@zonos.com if you have any further questions, and we will get back to you in an email if we don't get to answer them right now, but maybe we'll just spend 2 minutes going over maybe just 2 questions, just because I'm conscious of the time.
Okay, thank you, James. So thank you everyone for putting your questions in chat. We have received some very interesting questions. So one of the first one is, what is an established intermediary? James, would you like to take that?
Yeah, okay. So an intermediary is effectively a tax representative within Europe. It's usually an international accounting firm or a customs broker. And that intermediary is effectively going to act like your in-country agent. So what would happen is you would register for your IOS number, or we can help you with that. And then when it comes to your monthly remittance of your IOS fees for your pan-European sales, you're going to pay it to your intermediary, who's then going to pay it on your behalf to the country that you've selected. This could also be a tax representative. Okay.
All right, and it looks like Megan asked a really good question, and I appreciate where you're coming from on this one. So she is outside of the EU, but holds stock in France to sell and sells product via your own website. So the distance sale of goods is under 10,000 euro. Okay, so the 10,000 euro doesn't apply because that has, no, the 10,000 euro is only applicable to businesses established in the EU. Very good question.
And maybe we'll just do one more. Oh, this is a good one. So what is included in the 150 euro threshold for low value shipments? This is a good one and it comes up a lot. And I actually got this wrong initially and have since learned otherwise. So 150 euros is in fact the cost of the goods. The cost of goods only. It doesn't include the cost of duties, taxes, services, surcharges, anything like that. It is the cost of the goods. So that 150 value is only for cost of goods. Is there, as I say, I'm very conscious of the time. We're at 35 minutes now. So I think what we might do is call it a day there. And then what we're going to do is any questions that have come in, we're going to respond in email. So yeah, please get in touch, questions@zonos.com, and we'll do everything we can to support your international growth.
Thank you.
Thank you. Thank you so much, everybody. Goodbye.